Good morning, everyone, and welcome to the AI for Business and Finance in Africa workshop. I am Killian. I will be organizing this. Well, I was the organizer, and I'll be emceeing this. So today we'll be exploring how various applications in AI, and how it's transforming industry across the continent. We'll be doing this with a mix of invited talks, contributed research, interactive sessions, as well as a panel discussion. Just a little bit of background on the purpose of this workshop. So really what we were trying to aim for here is collaboration between industry and academia. I believe that academia and industry often work in silos, and in a continent with very low resources relative to the rest of the world, we can really benefit from working together a lot more. So that's probably the main goal I have. So throughout this workshop, I'd like all of you to network as well and try and connect. If you're doing research, try to connect with someone in business and vice versa. We also want to focus on the applied side of AI and how we can use the research to make real-world impact, not just papers, but actually turn them into real products that can change the continent. I really do believe we have a wealth of talent on this continent, and the next step is to provide a platform for it to manifest into tangible solutions and lasting change. Okay, so without further ado, our first contributed talk is a short presentation from Regan Chen, a computer science honors student from UP and a data scientist at Asazi Consulting, on what I believe is an extremely relevant topic: bias against African nations in leading industry models. The paper is titled Bias, the Hidden Tariff of AI for Industry in Africa. Please join me in welcoming him.
All right, good morning, everyone. My name is Regan Chen, and thank you for the introduction, Killian. As you mentioned, I am a data scientist at Asazi Consulting. And today I'm going to briefly talk about my paper, which is analysis into the bias of AI models, specifically when they're deployed within the African context. To illustrate this, I'll be discussing a real-world example from what we experienced in industry. The past couple of years has seen an incredible surge in the public's engagement with artificial intelligence, largely thanks to the emergence of large language models like ChatGPT. This has not only increased public interest, but has also boosted global industry's confidence in integrating AI solutions into their workflows. This all-round increase in interest in AI has resulted in a substantial increase in the funding towards research and development of new AI models and data sets, both closed and open source. While there's still a significant gap in AI development and deployment between Africa and the rest of the world, our continent is not an exception to this trend. We're seeing a growing adoption of AI in industry and an increase in research, with major companies like Google and IBM opening research labs right here in Africa, and a significant amount of new AI-centric startups coming out of Africa. In industry, a common best practice is to leverage existing tools and solutions to save time, resources, and capital. We apply the same principle to AI integration. Instead of building and training models from scratch, a time-consuming and expensive process, companies often turn to pre-existing models. In some cases, a problem may have a ready-made plug-and-play solution. In others, we can use transfer learning, which involves taking a pre-trained model and fine-tuning it for a specific task. This approach can drastically reduce development time. However, this convenience comes with a significant risk. When you use one of these pre-existing developed models, you're not just getting a solution, you're also getting any inherent biases with that original model. Subsequent fine-tuning doesn't always guarantee the removal of this bias, which can lead to unfair or inaccurate results, especially when these models are deployed in contexts that differ from their training environments. So, where does this bias come from? It's typically introduced in one or two ways. The first and most common is through the training data itself. If a data set is unrepresentative, if certain demographic groups are either completely missing or significantly underrepresented, the model will struggle to generalize well across all populations. This leads to biased or inaccurate predictions for those underrepresented groups. So how can this come from a data set? This can happen through historical bias, where the data reflects past social inequalities, data collection bias, where the collection methods are inadequate or unfair, or even label bias, where the subjective bias of human annotators are inadvertently transferred to the data set itself. The second, less common but equally critical source of bias can be the model's architecture itself. As this presentation will show, a model's design can become biased towards a specific data set if it's repeatedly refined against it. This results in a model that consistently underperforms on any other data set, even within the same domain. To illustrate this, I want to share a real-world case study from a project we worked on for a financial institution in South Africa. Our problem statement was to find and create a reliable solution to verify that a user uploading an identification document is the same person pictured in that document. This is more complex than simple facial recognition, like unlocking your phone. The challenge stems from certain ID documents, such as the South African ID card, which has no expiration date. This means a person could have a photo from when they were 16, but we need to verify their age when they are 40. We'll verify that the same person with a 40-year-old face and a 16-year-old face. This task is called age-invariant facial recognition, which involves accurately identifying individuals despite the significant changes in their facial features over time. Cool. Given the constraints of time, cost, and a limited data set, we decided to use an open source pre-trained model. After extensive benchmarking, we identified 4 promising models, as shown on the table above. We tested these on the FGNet aging dataset. Based on our test, the VGG-face with the deep-face library seemed like the most practical solution due to its high accuracy and faster speed, as well as the ease to actually integrate this model into our pre-existing pipeline. However, once we started internal testing, with the financial institutions data, we noticed a significant underperformance. We had to decrease the confidence threshold of the model to get more positive matches, as the model was consistently returning negatives, and most of these being false negatives. Internal feedback consistently highlighted its unreliability and lack of consistent accuracy. The model was simply not performing as we expected it to. This raised a major question. Could the model be biased in how it interprets faces across different demographic groups, particularly within the African context, where it was being tested and it was going to be deployed? Cool. So during our investigation to answer this question, we found a compelling study out of Nigeria and the UK. Their research provided strong evidence that the VGG-face model exhibits a bias against indigenous African facial features. They took this VGG-face architecture and trained it on a custom dataset of 5,000 images of indigenous African individuals. This was the FAG-V2 dataset. And another publicly available dataset that was more diverse, had people from America, Europe, Asia, and then Africa. This was the CACD dataset. When evaluated on their respective testing datasets, the model trained on the CACD dataset recorded a higher accuracy, as shown in Table 2. In order to account for the significant differences in the dataset distribution, they then conducted an additional experiment to establish a fair baseline. In this experiment, they selected 10 images from each of the 88 African American individuals in the CACD dataset, and then 10 images of 88 indigenous African individuals from the other dataset, creating two balanced subsets of 880 images each. Once again, training the two models on the datasets and showing a better performance on the CACD model, as shown in Table 3. This finding was powerful. It suggests that even retraining existing architecture on a well-curated representative dataset doesn't fully eliminate the bias. The architecture of the VGG-face model itself seemed to have been designed and developed with data sets that lacked ethnic diversity. This embedded bias is not easily resolved through fine-tuning or dataset substitution. It requires a more fundamental reevaluation of the model's architecture. This case study is a perfect example of broader issues that has come up repeatedly in my discussions throughout the Deep Learning Indaba conference. The bias we experience is not an isolated incident, it's a systemic problem. The key takeaway is that we need to address these challenges with long-term structural solutions. This means sustained investment in African research and building our own AI infrastructure. By fostering collaboration and developing homegrown models, we can improve the adoption of AI and enable Africa to play a dual role as both a consumer and a producer of advanced, ethical, and effective AI solutions. Thank you.
Okay, thank you, Regan. I think that was a great presentation, very insightful into the bias of industry models. Okay, so our second contributed talk is another talk that was submitted via research paper. It is an excellent paper on explainable AI submitted by Pastel Africa, titled White Box Finance, Interpreting AI Decisions in Finance Through Rules and Language Models. Please welcome Oluwafemi Aziz to present this paper.
Hello, everyone. My name is Oluwafemi Aziz, and I'll be talking about this paper, White Box Finance, Interpreting AI Decisions Through Rules and Language Models. Okay. I'll discuss the motivation behind this paper. I work with a company called Pastel Africa as the head of data science. We usually build models for enterprise, finance companies, fintechs, and banks. And one of the challenges we usually face is that you build, you're trying to decide what kind of model to build, and you try out linear models, which is what finance people like. They're very simple, they're very explainable, but then you're missing out of all the powerful models in the AI research industry. You're missing out models that have nonlinear mappings between the features and the target variables. And because you're missing out from all of that, you really can't get like the effectiveness from all of those models. Before I was with Pastel, I used to be with a company called Borealis AI, which is like an AI research firm under RBC, Royal Bank of Canada. And I remember then we would work a lot on linear models. And we would do a lot of statistics because it was just easier, it was explainable, it was comfortable for people in finance. And so when I moved to this exciting startup, I was looking at the challenge of actually moving to nonlinear models and taking advantage of all the advances we have in AI. And so the problem used to be that when you build these nonlinear models and you deploy them, the executives in some of these companies are going to ask you, like, how did your model make these predictions? How did you come up with these results? And then you face the new challenge of trying to explain the models. Obviously, there are existing methods, but these were methods that we decided to use that actually fit our specific scenarios. So the issue is that in this situation, this particular problem, we're working on credit risk models. They're very important because usually when you borrow money to the wrong person, when you lend money to the wrong person, you might really face large financial losses because some of them would not pay back. So you have this challenge of trying to ensure that you have a model that can tell you exactly who you want to borrow to. And so it's an important thing to work with. But the kind of models we use, let's say XGBoost, for example, they are black boxes, they have nonlinear mappings, and it's very hard to really explain them straight away. So there's finance wants you to be transparent, wants you to have explanations that you can audit and that regulators can see the exact reason why you made your predictions. So we work in all of the spaces. We work with models that have to be compliant, that have to be explainable. And so that's the challenge with machine learning models. They're black box models. You can't see the reason why they make the predictions they make. So our methodology involves two methods to help us with interpretability and to help us meet compliance requirements. So one of our first method involves using SHARP. This is not like your global SHARP. It's basically local SHARP. So meaning it's a SHARP method that explains, that gives you the top features that influence your prediction for every single prediction you make. So if you have a row, the Sharpe ratio might be different from the next one and from the third one and all that. So you get a different Sharpe ratio based on your local prediction. That was very useful for us because we can combine Sharpe ratio with GPT-4. So the way we do it is that for each of the features in our model, we have some form of a dictionary that explains what each feature means. And then when we make a prediction, we rank based on the most influential features that influence that prediction. So we rank that by maybe the top 3 or top 5, and then we use GPT-4 to with the dictionary that we created to actually help us give a reasonable English language sounding explanation for the model prediction. Now, the smart thing about this is that GPT-4 can be reasonable about how it makes the explanation, how it ties the explanations together. So in a situation where, say, you have a negative prediction, you're like, oh, this person would default on the loan, and you want the reason why they would default on the loan. And your model thinks maybe age or education, or like any of that is the reason. Like maybe you looked at your Sharpe ratio and your top features are like age, education, and then you have a dictionary that explains exactly what age means, what education means. You could have different kind of features that needs explanation like that. And then you provide all of that to GPT-4. So you provide a context that explains that, oh, this person has been predicted to default. Do you understand? These are the reasons why it's defaulting. And GPT-4 can create an English language explanation that makes sense for an executive to read. Do you understand? It usually is often reasonable, and it's sometimes slightly generic. Do you understand? So it fits the narrative part of why you make your model prediction, but it doesn't really fit compliance because it's not very accurate. It just fits the narration part. So maybe someone who is doing more research would need to look through the data and see whether, oh, it's actually exactly correct. So this was the first thing we came up with. I kind of served some clients, but some other clients who wanted compliance couldn't really work with this model. So we had to get a bit more creative and make something else that works well. And so this was the second one that actually fits compliance. The way this works is that, so this is the trick. You usually have to do some form of descriptive statistics before you make your model predictions. So I'm going to go through details in the results section where I would show you some of the graphs we had to draw. So basically, you do a descriptive statistics of the category of defaulters and the category of non-defaulters for each feature. And usually you can do like a visual plot of each category. And then you can use the visual plot to establish boundaries. Boundaries where you know, like at a certain number, when it's more than that number, it's most likely is defaulting. And when it's less than that number, it's most likely is not defaulting. And when you set up those boundaries, and you set up those boundaries, what you now do is that when you make your prediction, your model prediction, you then take all the features of that particular prediction. Let's say it's a defaulter. Then you take all your features and then you run it through a set of logical rules that you've initially created using those boundaries. And it will be set of rules for every single feature in your model, every single feature in your data. And so you run through each set of rules, and then you eventually would flag some rules. And those rules you flag would provide explanations to why, usually because you used descriptive statistics to set the boundaries of the rules, and you're running through all the rules one by one. Those rules you flagged would give good explanations to why your model made that prediction. The nice thing about this is that it's going to be accurate. It's going to be correct. It's going to be exact. So it's compliance friendly, right? So if a compliance officer wants to look at why you made your prediction, they're going to see that, they're going to look at your feature set, and like if someone defaults, they're going to see that, oh, the explanation you're providing is exactly what it is. So that's the nice thing about the rule-based method. So I'm going to go through an example so we can all see like an experiment that we actually ran, so we can all see what it looks like. So the experimental setup, we have a data set of anonymized loan application record that has demography, employment, credit history. And then we do some pre-processing. We use XGBoost model. And then we did some evaluation metrics on that. This was the experimental setup. And then we had an explanation module, obviously using our two methodologies, the Sharp plus GPT-4. Sharp, I said the Sharp is a local attribute, local feature attribution, and we take the top 3 to 5 contributions and we converted them to the textual narrative using GPT-4. And then the rule-based one, we use categorical histograms and KDE plots for numeric variable, categorical histograms for categorical variables, and KDE plots for numeric variables. And we use it to derive the decisions. And we use a lot of like heuristics, obviously, institutional heuristics. So this is what our data sets would look like. So you have age, income, loan amount, credit score, month employed, interest rates, DTI, and education. So this is what a result would look like. So if, for example, you have this kind of Sharp plots for for your model prediction, the sample explanation that ChatGPT could give you could be what you're reading now. So it's good. It could say, "Oh, the interest rate is quite high," and then explain why that the interest rate is high and why that could influence the reason why it could influence the reason why the customer is going to default. So it's going to give you an English language narrative. You can decide to have the Sharp ratio in your narrative, and you can decide not to have it, depending on who your audience is. So you might be like providing it to explanation to an executive, and you don't have to like put the Sharp ratio because they might not even understand what that means. So, but this would be a sample explanation that you would get from combining your Sharp ratio and GPT-4. And this is nice because someone can read through it and make sense of what you're talking about for that particular customer. The rule-based logic, this is the interesting one. So what you would do is that when you do your descriptive statistics, you can look at the plot on the left, the histogram plot. So if you look at that plot, you're going to notice that the defaulters are red and the defaulters are blue, non-defaulters are red. And so you notice that the less educated the person tends to become, the less educated they are, the higher they have a tendency to default. And so you can see from that graph, so you can kind of make a reasonable boundary. It wouldn't be exact, but you can make a reasonable boundary that might offer explanation whenever you have some certain kind of defaulters. Maybe you can set the boundary at, say, bachelor's, for example. And if you look at the KDE plots on the right, you're also going to see the clear demarcation at age equals to 40. I mean, you can reasonably see that with, so when the age is less than 40, you can literally see the spike of the distribution like sort of biased in that direction. And so you can set a reasonable boundary at 40. This is a good heuristic. So you can have a rule-based logic, like you can see above. So you can say, oh, if the age is less than 40, for example, you can append an explanation that young age could indicate lack of financial experience and all that. So that can give you like exact logic, and it's going to be accurate. In fact, in your explanation, you could also put your boundary in your explanation, like, oh, this is the exact boundary I have in my explanation. The beauty of this is that this could this could be a good best practice in the industry eventually, especially when you need compliant explanation for an industry like finance. This could be a very, very good way to ensure that like your explanations are very compliant and using very simple trick. And that would be my conclusion of this talk. I mean, so what we have deployed in our company is the hybrid approach. We have both the GPT for explanation and the rule-based one. So you have like both very rich, nuanced, human-friendly explanation, and you have something that's transparent that you can audit and that fits compliance. Thank you. I can take questions from now. Yes, you could. Sorry, the question was, as the data gets more and more, could you redefine your decision boundary? Yes, your decision boundary could be very dynamic. Yeah, you could always update your decision boundary based on that. One of the improvements we might make on this paper might be to find, right now, the way we define your decision boundary is to use like the plots, since you're manually building it, but we're hoping to find, to use an automated method to ensure that you can define your decision boundary, and that can always go with your model training, like with the model training data flywheel and all that. So instead of using the manual one right now, yeah. But thank you, great question.
Thank you for your presentation. So my question is, I've seen that you use column, which is like credit score, and many African countries don't have a way of attributing like the score of the credits for the loan, something like that. So which country, what are the countries that you use to collect the data, and what are the attributes, what are the things that you look into while attributing that this is just the score for this person, and like that, like how did you do that?
Thank you, great question. Don't be distracted by the specific example. The specific example had credit score, but you don't have to use credit score. Do you understand? Just that specific example just adds credit score for experimentation purpose. The focus of the paper is on the method, right? The method will work even if you don't have credit score. The method will work even for a transaction monitoring model. So there's many other kinds of model the method will still work for, but this was just an example. So the credit score you saw there is just an example for this particular experiment. Thank you. I hope that's clear.
Okay, thank you very much for the great presentation. My question is just two.
Okay.
The first one is, why the choice of sharp over lime? That's one. So the second one is, what about a situation whereby you have some uncertainty in the course of setting your rules? So I don't know if you put some fogsy into consideration to handle those uncertainty. Thank you.
Okay, thank you very much. For the first one, honestly, there was no much thought on what to use. It was just because of we just chose Sharp because it had the local attribution features and it was quite popular. We could always do another experiment with that, with Lime, yeah. But then for the second question, yes, we in this version we actually didn't consider uncertainties, but it's like an improvement that we would consider adding to the work, because yeah, very possible that some prediction could be very uncertain, and I mean we do have some form of uncertainty estimation in our own model, but for this exponential model we didn't like bake it in, and so it's like one of the next things we're actually going to consider working on. I mean, the usual thing we would do, I mean, like on what we have live, is provide the explanation, and also our customers also has access to the uncertainty of the prediction already, but we didn't bake it into the explanation. So like our clients already know that, okay, this is the explanation, this is our confidence score, we're giving that, but we didn't bake that into our our exponential model. But since we were building as a best practice and that's important, we're considering like actually adding it to the exponential model. Thank you very much.
Thank you, Oluwafemi. I think that's super interesting, and especially explainability with language models. So we actually have human interpretable explanations is super cool and very relevant. Okay, next up we have an interactive session from Askia Investment Partners titled AI for Business and Finance in Africa, Building AI Ventures. This will feature talks in a live pitch and feedback segment with Babacar Sek from Askia Investment Partners and Dr. Ismaila Sek from Gulson AI. Babacar is a seasoned entrepreneur and thought leader whose perspectives on African innovation and AI have been featured in leading outlets such as Le Monde and Semaphore. Dr. Ismaila Sek is both a researcher and entrepreneur deeply engaged in accessible AI solutions across Africa, as well as in growing local talent through Gulson AI and AIMS AMMI. Together, they will guide us through talks and what I'm personally most excited about, a live pitch and feedback segment where participants will pitch their product ideas and get direct feedback on how they can make a real-world impact with their product. I think this is super cool, by the way. This is essentially, to me, like an African version of Shark Tank or Dragon's Den. I don't know how much of you guys have watched that, but it's very cool. Please welcome Babacar Sek.
Hi, good morning, everyone. Thanks for waking up for this workshop. We're very excited to be sharing a few thoughts with you. So the way we're going to structure this, I'm first going to make a presentation about the opportunity we see to build generational AI ventures from Africa and how we think these companies can be built. And then Professor Ismaila is going to present his perspective, his journey as a PhD turned AI founder. And I think that's going to be very, very exciting. And then we'll go to the pitch session that Kellyanne mentioned. So I'd like to invite anybody who's going to speak in the pitch session to please come to the front rows so that we can know where you are. So first, yes, to speak quickly about Askia. So we're an investment fund focused on AI, investing across Africa, specifically from the perspective of people who have been involved in the ecosystem for the past 10 years. What we have seen in this space is that there's potential to have huge impact for the economy and for society. Some of the companies we back created over 30,000 direct jobs, trained over 40,000 tech talents. And with this new AI wave coming, we think there's potential for much more impact. So now more specifically about the opportunity. AI hit me in the head when I first went to the Future Investment Initiative, which is a big conference that takes place in Riyadh each year. Basically, every businessman and financier in the world was there, and they could only talk about one thing, AI. Everybody was excited, and investment is increasing. Now, there's part of the hype, but there's also a huge opportunity in there. Specifically, I will pass all the impacts of AI for the economy because you know this. But more specifically for Africa, what is the opportunity? The opportunity we see is that today Africa is digitizing at the fastest pace in the world. We were one of the, or maybe we are still one of the more less digitized continent, but increasingly that is changing. And the World Bank projects this, that Africa is actually going to reach 9% of GDP being its digital economy in the next few years. And that is expected to grow even further to 15%, generating a very big economic opportunity, but it's also an opportunity to increase the productivity of the continent across key sectors. And it's been driven for the most part by startups and telcos so far. Now, specifically, Africa has some advantages in this space, which relate directly to the opportunity that startups have to be building. We see at least 3 things and a 4th item that I will mention later. The first part is that we're digitizing in the age of AI. Contrarily to other regions that have a lot of established data systems that are maybe unstructured, that need to be restructured to pull the data, to organize it, the companies that are today digitizing Africa's economy are, in the most part, startups that are building their systems in this very day. So we have the opportunity, by helping them to structure the data governance properly, to create systems that are immediately AI ready. And we think this is a big opportunity. The second part is the opportunity to leverage the digital native workforce that Africa has. In a few years, Africa will have the world's largest and youngest digital native workforce. This means a very fast pace of adoption of AI tools, which we already see in the statistics in African urban areas, but also adoption by companies of these tools, because people are used to using digital tools in their daily lives, starting with mobile money. The third opportunity is that today Africa is very focused on consumption of AI solutions that exist. We think there's a space for Africa to be producing its own AI tools because we have less competition from the global players for whom it's not a priority to build services that are tailored to Africa. Services where the payment can be made with the payment solutions that we have here, services that offer customer service beyond, the basic platform that is available. And so we think these are some of the items that create an opportunity for African companies. Now, of course, the global tech players have seen this African opportunity and they're present here. They were here last year. And I think this is important to keep in mind because we need to believe in ourselves for us to be able to move forward. Now, I will move quickly to, okay, still have some time. I will move now to specifically sharing the investor's perspective on what it takes to scale AI ventures. Now, everything I'm going to share here is our experience at Askia, having worked with dozens of companies, but it's still just a perspective. Different investors will have different perspectives. You may disagree, and I would love to hear your thoughts, if you have differing perspectives. The first thing is that there's increasing funding. So it is possible to create these companies. What you can see here is a chart that plots the number of companies that have raised more than $200,000 in a given year in Africa between 2015 and 2024. We see that the number has increased around 8-fold by 2024. Now the amount increased 13-fold. So the first thing is that it is essential to keep in mind that for these startups to be built, they need capital, which is why the investor perspective is relevant. In this process, many billion-dollar companies have been created, you know that. Now, let's come back to the concept of startup. Why I'm coming back to this concept is because very often we see companies that are positioning themselves or having a mindset that is more the mindset of a SME, which is small and medium enterprise. And SMEs and startups are two very different animals. They might have the same number of years of existence, they might have the same size, but what differs is their potential. So what is a startup? A startup is a new company that's bringing a disruptive innovation to a large growing market or to a new market and with massive scaling potential. So that's the first difference, is innovation. The second difference is that they're really looking to take a significant part of any market that they operate in, contrarily to an SME, whose objective is to build a sustainable business of a certain size, but with a pace that is much slower. Now, why is this difference important? It's important because of the model of venture capital, which is a high-risk investment strategy that is designed to help and back companies that have a huge growth potential. It is about speed, and it is about scaling the company. And I hope I've shared something that is clear enough here, and I will highlight it further on the next slide, talking about what is venture capital. And I think it's much easier to understand when we talk about this. Venture capital, interestingly, was inspired by research and development after the Second World War. So the first venture capital firm was the American Research and Development Corporation, which was in the United States, and whose role was to fund companies that had a big potential, in particular in the semiconductor industry. It's inspired by R&D because it takes a stage-based funding. So instead of funding the whole project at once, we cut the different phases of development of a startup into key achievements that are required. There's the first stage, which is just building a product to see that a working prototype can work, which we called pre-seed today. Then there is the seed stage, where we're looking to help build the traction of the company, so demonstrate that there is customer interest in this solution and that it's actually working well when it operates. And then the third stage is called Series A, so it's when the companies must demonstrate that they have what we call product market fit. Product market fit means we have a working product, but there are people or companies that are very excited about this product and they're willing to buy it, and there's such a high demand that we need to raise capital to scale our operation, to be able to serve more of them. So this stage-based funding enables the investors to reduce the risk, because if you funded the whole project, you might realize after a year that this business doesn't have a market, or that the product cannot be built. So that's the first thing. The second thing is the power law. Otherwise also called, I think, Pareto. But it's the idea, and it's not an idea actually, it's a statistical output that in the startup space, as in many other areas, around 2.5% of companies generate 100% of all the returns of all the startup ecosystem. And if you look within those 2.5%, 0.5% generate 80% of all the industry's return. So what does this mean? This means that there is a very small number of companies that are going to be very successful, and most of the other ones are not going to be successful. They're going to die, basically. For that reason, investors who invest in startup, venture capitalists, can only back, if they're reasonable, companies that they believe could be in those 2.5%. Why? Because in a given portfolio of, say, 100 companies, if you have 50 or 60 that will not return anything because they close without being successful, then you have maybe 20 or 30 companies where you just get your funds back. Then maybe you have 8 companies where you make 2 times your initial investment. How much return do you have at this point? You have not even returned the capital of the funds to your investors. And so for the business model to work and for investors to keep investing in venture capital, you need these outliers that will drive all the returns. Now, those outliers can only be very high potential companies. And since at the moment of investment, we don't know who those outliers will be, we can only take our best guess of having a portfolio of companies that all have the potential to be outliers. And very often I meet founders who have built a very solid business that is profitable, that is growing, and they don't understand why they are not able to raise. And the reason very often is that investors do not see how this company can put itself on a trajectory of very high potential growth and very high potential outcome. Because if there's not that, it doesn't make sense for a venture capital investor to take medium risk for a medium outcome. Because it's very likely that half of the companies in their portfolio will not return anything. And so this is one of the things that drives the distinction between startup and SME. And it's very important as a startup founder to think about it. Now, finally, just to say that my perspective is that venture capital is R&D for the real economy. So effectively becoming an entrepreneur or startupper, if you're doing it in this mindset of startup, it's actually like doing very applied research directly to the customer. Now, maybe Ismaila will disagree with that. Now I want to share about how investors think, at least how we think as investors, which is based on what do we think is required for an idea to be a successful startup. Now, first, what I put at the bottom, don't be a jerk. Why do I say that? Investors, the investors that will be the most important to you will be the ones that invest the most in your company. They will be your business partners for many years. The average holding period is anywhere from 7 to 10 years. So you will have to work with these people and they'll have to work with you. Nobody wants to work with someone they don't like, regardless of the potential returns. And regardless of all the Silicon Valley noise, the reality is most successful founders are very humble at least to their investors. So I want to say that first. That's a prerequisite. Now I put 6 pillars there. So we'll go through them one by one, and I'll try to give examples each time. The first most important thing, given what I've said just before about the type of outcome that investors need to even survive, because they're also companies, is companies that are solving a big problem. What is a big problem? A big problem is a problem that is perceived as an important problem by a given person, and there's a lot of this person. This person can be an individual or a company. It doesn't matter. And what is important as a question there is understand how big can it become. Again, we're talking about potential, but here we're talking specifically of the problem. Now, sometimes, very often, startups will define the problem as something very generic. Oh, we want to solve post-harvest loss in Africa. That's a real problem. Everybody suffers for it because the cost of food is higher and there's a lot of waste and food insecurity. But when you say that, you don't say whose problem this is. It's everybody's problem, so it's nobody's problem. As a startup, you should identify your problem by saying for who is this, whose problem are you specifically solving? Because that is going to be your user or your customer. And so that's the place where you need to start, where you define your problem. Because if you define it in a generic way, your business also will go in all directions. If you say, I want to increase or reduce the cost of mobile money payment for small businesses because it's very high and it impacts their margins, that is a very clear problem. We know exactly for whom you're solving it. You can know how many potential customers there are. You know what is the starting point. Today they pay 6% transaction fee. Tomorrow they pay 1%. If we take AI applied to, I don't know, healthcare, for instance, I want to give instant claim settlement to everyone in this healthcare insurance industry. Why? Because it is a big problem for pharmacies, hospitals, etc., because it creates a working capital need for them. And they will love my insurance, so they will even promote it themselves. Now that's something that AI can do and is doing in some places. And that's a very clear problem statement. And if you have a clear problem statement and a clear user or customer, then you have a very good starting point for your business. And you'd be surprised how many companies don't have this. A lot. Now, second is what is your unique perspective on this problem? Because it's great, you've identified a problem, but maybe everybody knows about this problem. So what do you know about this problem that other people don't know and that give you an edge? What is the different future that you see? Why is that different future possible? Have you identified some inflection points? Do you have some specific insights into the problem, into the customer, that enable you to understand that, oh, actually the problem, like, maybe we just discussed in healthcare insurance, so let's skip to that. The problem in healthcare might not be where we think it is. It might be in the insurance space rather than in the healthcare space, because maybe the problem is financing. There's no financing of healthcare. There's no risk pooling. That is the real issue, maybe. Who will benefit from the insights and inflection point you've identified? And as a result, where are you planning to position your business? Third important thing, which is as important as everything else, maybe the most important, is timing. If you're too smart too early, you don't have a business. The problem with companies is that each month they have expenses, and if there's no revenue, you will die very quickly. And so it's really important to understand why now. Why is now a good time or the best time to launch the company you're launching, to launch this solution? I'm trying to find an example of something. Okay, let's think about Uber. Uber was only possible because there was a GPS included in the smartphones that arrived, around 2008, etc., with the iPhone. That's what made it possible. So the companies that started at that time, Lyft and Uber, and maybe a few others, were started based on that insight, that inflection point, that opportunity that started that said, from your phone, you can order services that come to you because you're geolocated. Now that is a huge change. And one way to ask yourself this question is to say, why is my problem more solvable today than 1 year, 2 years, 3 years ago? If you can't find a reason, then you have to ask, why has nobody done it? So that you can very precisely pinpoint what do you have that others haven't seen, or maybe identify that maybe this is not as easy to solve as you think. And this is the first tree, so I'll move to the last tree. See time, okay, I have to move quickly now. The team. There's a saying in business that your team is your strategy. Okay, so effectively, your strategy, another way to say it is your strategy is as good as the team that is going to implement it, especially in a startup where you don't have established systems, customers, etc. So the questions we like to ask to help founders to think about this, the first one is, what are the team superpowers versus what you believe is required to solve this problem in the unique way in which you define it? What is really important for the customer? If we take payments, it's transaction success rate and management of any transaction failures. So if you have a high transaction success rate, then it's very good for the merchant because they don't lose business. If you, on the other hand, have a very good customer service that solves double charging of transactions and those kind of remittance issues, and you pay them their money fast, then they will be really happy. Now, once you understand what your customer really wants, then you can derive from that what your team really needs to have. So a fintech startup that is doing this kind of payments infrastructure, but that does not have a very strong engineering team that can build those very complex systems, that is very modulable at the same time and very scalable, cannot succeed in that space, regardless of the product vision they have and anything else. They need to have the good product specifically for the customer pain point. So you see, this is linked to everything that we said before. It's again based on your unique understanding of the customer's problem. Second, do you have the best team in the world to solve this specific problem? Now you have you say, okay, you've understood the key success factors, you have them, is this the best? Because this is the question investors will ask. One space that is very hot today, of course, is AI. And there are so many solutions for robotic process automation and workflow automation inside companies with no code where you just type text. Now, the question the investors have in mind when they discuss with the entrepreneurs is, why should we back you instead of company 5, 10, 15, 20, that we met in the past month? What specifically do you have that is better? And so that's why asking yourself this question as an entrepreneur is very important, because it helps you to challenge yourself. You may not have the best team in the world on day one, but you have to strive to get there. And that progression also is extremely valued by investors because they see that you understand the challenges of your business and you challenge yourself to get there. Now, the way we like to think about founders, we say, okay, are they a tech Dangote? I think everybody knows Dangote. He's the most successful businessman in Africa. He has some characteristics that are really interesting. He's very persistent. He's very ambitious. He's also very humble. He's someone who has built huge things based on his persistence, going from sector to sector and being really good at what he does. So that's one question we'll always ask. Are these people in it for real? Are the founders really committed to solving this problem, even if it takes 3 startups to get there? That's the kind of people who really build those generational companies that we're all looking for and that can really reshape the continent. Now, for the last 2 points, superior solution for customers, we've spoken about it. A couple frameworks or questions to think about your solution. Is this a vitamin, something that is a nice to have? Is this a painkiller? I have a headache. It's good to have a painkiller. Or is this anti-venom? Or is this fixing my hair being on fire? Now, those are very different scenarios, but you need to understand what specifically are you providing to the customer. Is it 10 times better than the next option? And next option doesn't mean your startup competitor. Next option means what people use. So you might be offering a software solution, but people use Excel. So if you benchmark yourself to the other software solutions that are SaaS, you might be benchmarking yourself to the wrong thing. If you benchmark yourself with Excel, which is free, unlimited, and works for a certain category of customer, then it's much more realistic. And finally, in one sentence, investors are looking for companies that can scale with a smaller amount of capital. One ratio you can look at as you build your company and you scale it is how much revenues have you generated from the capital you've raised. And this has to be a multiple. So if your total revenue is 10 million and you raised $1 million, wow, that is great. I mean, in a short amount of time, not 15 years. And generally, from my experience, the great companies, they have a ratio of at least 2 or 3. So for any dollar in equity that they raised, equity even or debt, they have 2 to 3 times multiple in revenues. And this is a good indicator because it basically drives everything. It means your process of growing your company is very scalable. And you don't need $100 million to get to $100 million revenue. I will not talk about this. I will let Ismaila talk about from research to product, but it's still always the customer. And from prototype to startup, I'll just say a couple things. One thing I've noticed with people who have more of an engineering tech background, they tend to focus more on product than focus on the customer, trying to have something that is too perfect, too overdeveloped, when actually what you just want to test is, do people need this? Do they want it? If people are chasing you for a solution that is half-baked and not good, you have a really great business waiting for you. You don't have to have the full thing on day one. Yeah, that's it for me. So maybe I'll take some questions and then Ismaila will present the next part. Thank you.
Yeah, so hi everyone. I'm Amo Bazongo from Burkina Faso. Nice presentation. Just a quick question because in terms of venture capital in Africa, we know that some areas are potentially, I would say, a bit cold in terms of business, and some entrepreneurs become like ecosystem builders, because in Africa sometimes we don't have infrastructure, right? So how do you, as an investor, let's say an entrepreneur comes and see you and you see that, well, he's actually building infrastructure and it takes time, right? And you don't have a clear path to success. How do you advise him and how do you handle that kind of founder? Yeah, thank you.
Oh, thank you for your question. It's a very good question. We see this trend a lot on the continent. And I think when you said other areas, you mean geographic areas, right? Yeah? Okay. So I think the biggest challenge when you face a lack of infrastructure, and I can come back to this slide, I think there are two pillars here that speak to that. The first pillar is the right timing. If the infrastructure is not there for a specific business idea to be developed, and that you actually have to build the whole infrastructure, and it depends on the scale, right? Then it's probably not the right thing to do if you don't have the capital to do it. Because it's very unlikely that investors will back it. I will make some exceptions to that. If you're a very good fundraiser, then you can chase those kind of challenges. And some companies are trying to do it. You know, Jumia tried to do it in the e-commerce space. They have not succeeded as much as they wanted. Many other players have tried to do it in the B2B trade supply chain. It's been also very, very difficult. We'll see if they succeed in the end. But sometimes when the infrastructure challenge is too big, it means at least you should not build it as a startup. You know, maybe it's an SME. The second thing is, sometimes people who end up doing that, the problem they're trying to solving is too broad. It's not specific enough to a specific set of customers. You know, many of the great companies we see today, they started focusing on one set of customers and then finding out who else needs this that I've built. I give 2 examples. PayPal started as the payment solution on eBay. That was almost their only customer because there was, you know, very high dynamism on eBay, but people didn't trust each other to send the money, you know, when somebody was buying something. So they had 90% market share on eBay. And then they expanded to more things. So I'd always encourage founders to focus on a specific problem for a narrow set of customers, but that potentially can be replicated.
Great presentation. My question is, how wide should you, or how very specific should you define your problems? Because sometimes you can be too specific that doesn't allow you to pivot whenever there's a need to, or like it really injures you when you need to pivot. You understand? So sometimes you can define a problem in a way that's like broad enough that still allows you to, you know, maybe when you're looking for a customer product fit, that still allows you to explore different things until you really, really eat what your customer really wants. Because sometimes you think you're very sure of what they want, but you might need a little bit of, you know, that exploration of that space to see what exactly they want.
No, thank you. That's a very good question. I think there are 2 things in your question. The first thing that you said that's very important is pivot. What is a pivot? Is when a company changes direction. The only thing that never should change in a startup is what is the problem you're solving. This is the pivot. You know, pivot when you play basketball, it's the foot that doesn't move. So that's why it's really, really important to nail your problem well. Now, like we said, you want to be solving a big problem, not a small problem. And so there's always this balance between how narrow is your definition of the problem versus the potential startup scale you want to build. There's no solution, but I would encourage you that all these things that I've shared now, this is not set in stone on day 0 when you launch your startup. These are things that you ideally work together on as a team, as a co-founding team, and you refine as you learn more about your business. So a question I ask founders very often when I meet them is, how has your understanding of the problem you're trying to solve changed based on what you've learned about your customer? And very often they've evolved how they understand the problem. But the problem is what drives you. That's what you want to solve. So it should not change massively. Otherwise, it's another startup, which is possible also.
Yeah, thank you very much. The presentation is an interesting one.
Sorry,
but my question has to do with, you emphasize on speed, that these startups need to ensure that they don't slow down the pace at which they go. But from my experience and my finding, I discovered that different countries have different policies that hinder some startups to grow on time. So it's more like there is no level ground for some startups in some countries to grow, while some make funding available through some of their parastatals. Let me give you an example that happens in maybe SADC, for example, recently. Some fintech, for example, who are trying to ensure that people can easily maybe send money from one country to another. But because of the banking policy, some businesses have to maybe fold up. So it's not like they are not moving at a good pace, but because of the policy. So what is your advice on what they need to do concerning the policies? And some are trying to also focus. Some have AI startups, some have startup, which is more open. So what would be your advice so that they know the niche to focus more on? Should they specialize or should they open up so that they have vast opportunity? Thank you.
That's a good question. I mean, policy impacts startup a lot, especially in the regulated sectors, whether it's healthcare and financial services. I think there was a lady with a question at the back, on the right. Yeah. So I don't think there's anything you can do about it unless it's at a, grouping level, like having kind of a financial sector association that is going to go and speak with the regulator, engaging a dialogue, and making sure that they don't break the companies, which has happened in some regions where the regulator wakes up one day, puts out a policy that nobody has ever seen, and every company becomes illegal, basically. That's happened sometimes in Nigeria. It's happened in the WMU region as well. But fundamentally, if you think the policy space is not adequate for the startup you're trying to build, and you don't believe this is going to change now, then you should not be building a business in that space if you don't believe the environment is good. And that addresses the timing question. Now, about specialization versus generalization, my personal bias is focus. Focus, but keep options open. It's very hard with a small company that has very few resources to do several things well at the same time. However, what you can do is move fast, test one idea. If it doesn't work, and fundamentally you identify that it cannot work, then you quickly move to the next one, rather than try 4 things at the same time and fail them all. Next question. Introduce yourself.
Yeah. Hi, everyone. My name is Goodluck. I'm a Nigerian. I'm also a software engineer and a founder as well. So I really do enjoy the whole presentation. So I have a question to ask. It's more of I need an advice from you. So my question would be, first, what would you advise a startup founder that wants to pilot into another country? What would you advise them in terms of policy and regulation? And then my next question would be, so you discuss about speed, and it can be very, very tedious getting funding to run your startup. So what are we used to hear a lot about culture in startup, even in one of these Fortune 500 companies, we hear a lot about culture. So for you that is just starting and you need to run with speed, how do you imbibe culture into your startup so you get the right hands at the right time to do the work fast and in speed? Thank you so much.
Thank you. Those are, I think, 3 great questions. You asked about culture, you asked about speed, you asked about expansion. About expansion, what I've seen that works may not work for all businesses, but it's something I now call minimum viable operation. So what is the smallest business operation you can create in a new market that enables you to learn from that market? It's a very good strategy if you're planning an expansion and starting it before you have the funds to fully scale those new markets. So what does it mean? Say your startup has two or 3 products. You pick the one product that is least costly to launch and that has highest potential to be interesting to the customers in that market. And you just roll out that product, you take a small office, you have a couple people who develop there and come back to you with learnings and insights. You can launch a new country with $25,000 with this strategy. And what is good about this is that it shows investors that you've already started learning about expanding into this market. So if you effectively are successful in your first market and you're planning a fundraise to expand, you can tell investors, see, I've been in those 3 markets or 2 markets for the past 18 months. This is what I've learned. When we invest to scale, this is what we're going to do, because now we understand much better the customer problem. It's as if you've created a pre-seed startup in those spaces and you've de-risked them because you've expanded your knowledge and your customer base. So that's what I would recommend. Second, on speed, speed is important because if you're slow, you take more time to get where you want to be while you're unprofitable. So it increases your chances of death as a startup. And so culture, I have no unique insights on culture. I'll just share from this book that has inspired me a lot in the advice I give to founders and even how we run Askia. It's called What You Do Is Who You Are. So culture is not values that you claim to have. Culture is what people do. Culture is what do you reward in your organization and what do you not reward or what do you punish. So if people get rewarded for lying to get a promotion, then that is culture, that is your culture. If people get rewarded for doing things in advance, being early to meetings, being engaged, being proactive, then that is what they're going to do, that is going to be your culture. Yeah, I think we have other questions. I don't know how much time we got.
Right. Hi, thank you for the presentation. Jason Quist, co-founder of HireGen AI, and my question is on investors. So what should I look for in an investor? Secondly, in the West, I could probably raise 500,000 pre-seed round for 5 to 7%, but in Africa, I could probably raise around 300,000 for about 25%. Recently, a few weeks ago, I was offered $1.5 million for 65% on a trip. I met a Thailand investor, but I had to turn that down because it was ridiculous. So how do we do that, especially my company, when we're closing our pre-seed round at this stage? Thank you.
I mean, what you should look for in investors is what are they trying to achieve and is it aligned with what you want? You know, do they want returns in 3 years? Are they really long-term? What is the kind of company they believe in? Is that aligned with your beliefs? And do you have the same values? It's the same thing as you'd look for in a co-founder. So the other part is what do they bring to the table besides money? Are there any value added, contacts, introductions, customers? Then about valuations, you know, we have all valuations in Africa. I mean, of course, we don't have $10 billion pre-seeds like Myra Murati, but, you know, the valuation is also a function of the market's potential. We have smaller markets, hence the valuations are lower. So I think Kellyanne is looking at me. So we'll take maybe 3 last questions or 2. Let me see. We need more ladies. If there's any lady raising their hand, they have priority. Yeah.
Okay, thank you. My name is Sarah from Tanzania. So I have like 2 questions that I would love to ask. The first one is, in our country, a startup is kind of not that new, but there is a big confusion between SMEs and startup. So even if you start a startup right now, the authority will be there to collect taxes, and you as a founder of startup, you don't even, you don't even catch up everything. And so do you think like it's not the right time because of there is no like a big confusion between SMEs and startup, taxes are there very high and all that? That's the first question. But the second thing is about having the right team. Can you share a little bit, how did you get your team? Because for me, it's a bit hard. Maybe you can just share a story so that I can learn from you. Thank you.
Thank you for your questions. I'll start with the second question. I mean, building a team is very, 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 very hard. It's the hardest part. Once you have the team, you probably did the hardest work if you did it well. The way I built my team, first, I asked the question, you know, what are the important things, like I said earlier, superpowers that we need to have to be successful, you know, as a company. So, I mean, our business as a venture capital fund is slightly different because our users are startups. They're also the product, and our customers are the investors. So what we are providing to startups as a service is the best support to scale them. So that's how I thought about building my team. I needed first to be able to find those companies. So I needed very strong research skills internally. And the second thing that I needed was to have, you know, the most powerful team in terms of all the doors that we can open, companies, governments in our key markets. Because I had it in certain markets, I was looking for someone who had it also in Nigeria in particular. So that's how I built my team, focusing on, you know, the most important things I believe are required for our success. And then you just need to find people and make sure that you align in values, in culture, and in, you know, what we're trying to achieve. You had another question about taxes and, is this a big enough hurdle to decide not to launch a startup? I said, definitely no. That depends on your level of how much do you want this, right? There are some good startups from Tanzania. I think there's Ramani that has scaled quite significantly in the commerce space. Startup is also about just figuring out how to make things happen when they're not obvious, when everybody thinks it's not possible. And sometimes it requires some tactics, You might find out that you cannot take the straight route that Silicon Valley is preaching because you have this issue. So maybe you're going to have a side business that generates the revenue to pay those taxes while you're building your product. Or you find another solution. It's also about just getting there. Do you have another lady with a question? There's one here with the hat.
Hi.
Hi.
Thank you for the presentation. My name is Mama Jagana, and I am from Mauritania, a country next to Senegal, for those who don't know it. So, I have a background in data science, and I am a co-founder of an IT startup. My question is, in my country, unfortunately, AI is not yet developed very well. Let's say it's an embryonic stage. That said, there are startups with potential high impact projects that are very promising in the future. So do you support them despite the fact that the ecosystem in which they are immersed is not very yet encouraging? If not, are you planning something to help them or like with this? Thank you.
Thanks for your question. For us as a firm, we're interested in all of Africa, that's for sure, big and small markets, big and small countries rather. What is important for us is to see what I shared before, is to understand specifically in the case of Mauritania, what I would ask is, how big is the problem being solved? You can have a very big market in a small country. Companies like Wave have managed to build billion-dollar businesses out of a small country like Senegal. So there's no reason why it's not possible in Mauritania. But you do need to have the founding team that has, that vision. And one thing I have not mentioned, which is definitely key, is the growth potential as a team. A team that is constantly learning and challenging themselves to get to the next level and expand themselves as they scale the company. Today, we're not doing anything specific in Mauritania, but in general, we participate in a lot of workshops, startup jury to help companies to have more feedback and advice.
Thank you.
And I think we have to stop here. We can address any other questions later on if we have a drink or something. Thank you very much, and I'll pass the mic to Ismaila.
Hello, everyone. I'm Ismaila Sek, PhD in computer science, actor in the Senegalese AI space. Let's say academic program manager of Galsen AI, one of the co-initiator of the AI Hub Senegal. I wear many hats. I'm also a lecturer and a researcher, as it has already been said. So I'm going here to talk about lesson learned from my first AI venture startup. And I think I will also have some answers to a few questions that have already been asked. Okay, so first things first. So I did a PhD. I was a postdoctoral researcher, and then I jumped into the startup world. What do things might have in common? So what is transferable from research to the startup? I think the key thing there is research and innovation. When you are doing research, you have to find new things. You have to find new ideas. You have to push the boundaries. And I think startup is the same. It's an experiment that if it succeeds, can bring a lot of value to a lot of people. So I think, yeah, the main character that is transferable is the ability to craft an experiment, to run that experiment, to learn from that experiment and iterate. I'll stop at that, and I might come back to the entire journey later. So as a founder, according to you, I'm going to just give that question and going to go through the presentation and get back to that question later with the answer so that you can have time to think about it in the background. So what is the single most important aspect, according to you, of running a startup as a founder? So that's the question. Now let's jump in. Here are a few lessons, let's say. One of them is inside the startup, there are only opinions. The facts lie with the customer. I think someone asked the question, okay, we might think that customers want this. And then later, we find out that we were wrong. Yes, that's the process. That's how it works. Because you had an opinion, and you had to go in the market, to go face the customer and test if your assumption is good. So maybe one technique or one advice to not fall into that is create an assumption log when you start your company and try to see how to validate your assumptions and even think about what conditions made them true and like how those assumptions could go from being true to being false. Like what should change for them to go from true to false, or the opposite. You had an assumption that proved out to be wrong. What should be changed to go from wrong to right? And so that's the way not to confuse hypothesis and reality, because it can be very costly. If you take a hypothesis, if you take your opinion as true, and then you spend 9 months, 12 months developing something before like first customership, before trying to put it in front of a customer, then you have wasted 12 months. And it's really important to try to, let's say, decrease the time to market, to minimize it as much as possible. You have an opinion, okay, how can I test it? Like the fastest way, what's the fastest way to test it? We're talking about speed, I'll get back to that later. What I want to see, like I can talk about that here. So seek clarity. Nowadays, especially when you're doing AI development or software development, as part of your startup, we talk about like agile. We are agile. So don't confuse agility with being messy. I think that's what happens in a lot of startups. You confuse agility and messiness, two different things. Don't confuse being structured and being rigid. And I think coming from research, like you have to be structured because otherwise you are just getting lost. And try to keep track of as much of things as possible. Write them down. As they say, the difference between science and just fooling around is writing things down. And here also, talking about clarity, don't confuse speed and hastiness. For example, if I am to bake, let's say, a chicken, and I have to put it like 3 hours at 300 Fahrenheit degrees, I'm not going to get the same result if I put it 1 hour at 900 degrees. And I think that's the difference between the right speed and being hasty. So I'm going to ask a question. We have two teams, Team A and Team B. They have the exact same targets and means. One of them reaches the target and the other miserably failed. What happened? Most likely, one of them is more structured, has a better plan. And here is the answer. You don't rise to the level of your goals. You fall to the level of your systems. At the beginning of the year, we'll have the championship, let's say Premier League. Manchester City will want to win the league. Other clubs will want to win the league. But at the end of the year, only one club will win. And it's most likely going to be the club with the best system. So try to think in system. Another thing as a founder, you have to align your thoughts, your words, and your actions. Otherwise, it creates a lot of confusion inside the startup, and you think that everything is aligned, that the ideas are clear for everyone, while they are not. And when you discuss with the team members, you see that everything is not aligned. We don't define the things the same way. For example, we might use a word, but we have many different comprehension of the exact same word. So as a founder, you have to make sure to align your thoughts, your words, and your actions. And some other thing is, if your words and your actions are not consistent, it doesn't build trust. It erodes the trust, and at some point, everyone is confused. So these are like first few things I wanted to talk about before going back to this question. Now, can someone wants to take a guess of what is the single most important aspect of running a startup as a founder? I'm just going maybe to take 1 or 2 guesses, and then does someone want to take a guess? Yes. It's very important, but for me as the founder, there is something like, let's say, within yourself, or like the way you proceed. That's very important. But nice try, that's important as well. Yes. Structure is part of it. Yes. Resilience is part of it, please. You wanted to say resilience? Yes, go ahead. Okay, please. Motivation, all that. And for me, it's like decision making. How do you take decisions? What's your process of taking decisions? And I think as a founder, that's the most important thing. That's my opinion. We might have like different opinions, and we might discuss about them. And why I think that, I don't think we pay, the CEOs of the big companies to write code or to do some other thing. I think they are paid that much money because of the number of right decisions they are going to make. And at a certain stage, making the right decision 75% of time and making the right decision 80% of the time has, as expected monetary value, a huge difference. It can make the difference between your startup surviving or dying decision making. So I prepared the slide, and then I tried to enrich it. So I'm going to talk through a lot of things just like this. One of the first thing is never stop learning. You have to try to minimize the time to market, let's say, the time to get the feedback. And also your customers might not be telling you the truth. Try to put in front of them something and derive information from how they react, derive information from the usage, derive information from how long they spend on your app. Focus, as decision making, try to do fewer things better. I think Babacar talked about being focused. You pick one problem and you try to create a best solution. The analogy I usually give is, let's suppose someone gets up and tries to build a well to get water. So on Monday, he dig 1 meter, but on Tuesday, he changed for some reason, saying, no, I'm going to build my well, a few meters late, the site. You do that from Monday to Sunday, you have digged 7 meters, but you only have 1 meter every time. That's dispersion, that's lack of focus.
And now I'd just like to present the Best Paper Prize Award for our workshop, AI in Business and Finance. Congratulations to Israel Odiajo for his talk on a multilingual financial guidance. Please clap. Yes. So the award is an NVIDIA 5060 Ti graphics card, which you can use to train your own AI models to your heart's content. You're not allowed to use it to play any games, only training models. Yes. Okay, so finally we'll be closing with our panel discussion. Can I please invite our panelists up here? Ndivor, Dario, and Babacar. Okay, so our panel discussion is titled AI for African Industry, Opportunities, Risks, and Innovation. I'll be moderating, joined by our panelists, Dr. Dario Fanucci, Dr. Ndivor Makondo, and Babacar Sek. Since you've already heard from Dario and Babacar, let me briefly introduce Ndivor. So Ndivor is a research scientist in machine learning at IBM Research Africa, with a PhD from the Tokyo Institute of Technology and a background spanning robotics, computational intelligence, and applied AI. He has led research on mobile manipulation at CSIR and is also a visiting lecturer at WITS. Please join me in welcoming all of our panelists. Okay, so just some notes on the format. So I will be asking a question to one of our panelists each. The question will be targeted at that panelist, and then we'll open for discussion afterwards. We'll go through a series of questions, and then we will open up to the audience for your own questions. Okay, so my first question is for Dario. So Dario, between 2022 and 2023, Africa saw 103 AI-related venture capitalist deals totaling $641 million. Just 0.3% of the projected global AI investment for 2025. Given this vast disparity, how can African businesses remain competitive in the global AI race?
Thanks, Gillian. Let me check. Yeah, okay. So it's one of those conundrums where, you know, the scale of the investment is much lower on the continent. That being said, I think that Africa has an opportunity, not being very deeply embedded in some of the older technologies that AI is replacing, to leapfrog much of the rest of the world. And we've seen this already in some spaces. I mean, if you look at things like the adoption of mobile money, I mean, you see it here in Rwanda, some of the digital fintech services, where countries in Africa are actually ahead of what the rest of the world is doing. And I think that it can be similar in AI. Yes, there are constraints, but constraints are, in a way, the creator of invention, right? They say necessity is the mother of invention. And if you look at some of the really, really fascinating companies coming out of Africa, one of my favorites is here in Rwanda called Zipline. I mean, they're a drone company, and they are one of the leading companies in delivering packages. They've been delivering blood to hospitals here, and they're now in the US working on package delivery, and it's really, really impressive work. So I don't think we should see Africa as, you know, in any way lagging. And one of the beautiful things about AI is a lot of it is open source, a lot of it is cheap to use per token, and so it also equalizes the playing field for new entrants.
Thank you. Do any of our other panelists have any comments or additions to make?
I'll add very shortly. I totally agree. I think we have some advantages that you don't have in other places. One that he just mentioned is that we don't have those legacy systems, so we can structure the data and architect it in a way that's adapted for AI. And beyond that, the other opportunity we have is that in Africa, the digitization of the economy is happening in economies that are, by structure, exclusive. You know, if you think about the banking sector, for a very long time, it only served a small part of the population and of the businesses, so the wealthier, basically, and the larger ones. Now, when mobile money came, it suddenly became the opportunity to bank everyone. And so we think about it in that way, that across all sectors, this digital opportunity is actually the bigger share of the pie. Where in other places, it's about optimization at the margin. And so we really have an opportunity to build a fully digital society.
Thank you. Okay, my next question is for you, Babacar. So, Africa faces deep economic inequalities. The richest 10% hold 71% of the wealth, while the bottom half hold just 1%. How can emerging AI technologies in business help reduce this gap rather than widen it?
I think by nature, AI will increase inequalities. I think it's more in the design of how do we operate those businesses and what role these businesses consider they have in society. Because what is a role of a business? The role of a business is to solve a customer problem and make money. But actually, companies that thrive more generally are companies that are very involved in the ecosystems in which they evolve. Because think about it, if we have an extremely unequal society, and there's a lot of civil strife, of which the most extreme version is civil war, a company cannot thrive in that sector. So the company has an interest in maintaining an ecosystem where people are wealthy enough. So I think that in that sense, increasingly as there will be more economic inequalities driven by AI making the winners win more, it will be the responsibility of those businesses to see how do they contribute more to society. If we take the example of the beginning of the Industrial Revolution, when they started making the Ford T, which was really a big jump in productivity in the US, there was one rule that Henry Ford had set, which was that every worker in the factory should be able to afford the product. Now, that's an interesting rule. We could think about it for iPhones and shoes and other things.
Yes. It's very interesting. Do any of our other panelists have something to add?
I have a quick comment. Also agreeing, I think Steven Pinker wrote a book, The Better Angels of Our Nature, in which he presented scientific evidence for every technological innovation bringing more access to the poor and more capability. So before the internet, you had to go to a library and you had to be near a library to get information. Then you could get information from the internet and it was easier to learn. And now with language models, most of which you can get, you can access DeepSeek for free, you can access ChatGPT for free. It's open access, which means you have access to an advisor or a coach now that you would never have had before. So that access for everyone who has really just an internet connection is creating more opportunity for people who wouldn't have had it before.
Yeah, maybe just a comment. Is it? Okay. Yeah, I think governments also have a role to play through policies. I think an example to get businesses to be responsible for uplifting the countries is through skills development, right? So it does benefit organizations by upskilling the community, so they have a pool of talent to hire, and government can actually encourage that through tax incentives in one way or another.
Okay, I have one more quick follow-up question for Daria on saying technology tends to converge, inequality. So one argument I've heard for the other side is that currently, at least within South Africa, and I think it's the same across the continent, you have many areas that don't even have solid internet access. So how do we not, cause a scenario where that divide just compounds?
Yeah, that's a good point. On the bright side, we've got governments. And I think prioritizing access to connectivity has to be a #1 concern, right after keeping people fed. You need to get them connected because that's how they get access to all of this. But it's a good point.
Okay. Next question is for Ndivua. You work closely with emerging AI researchers. What can be done to better retain, support, and connect African AI talent to opportunities on the continent rather than losing them to institutions and industries abroad, which we seem to do a lot?
Yeah, I think firstly we have to strive towards working on fundamental research locally, because I think great talent wants to work on complex and interesting research problems. So you see this when you go to international conferences, whether it's AI or robotics. It's always interesting, deep research questions. And I also see that when you're working for these like research divisions of these big tech companies that that are globally integrated, that even when you're local, you're still getting to work on interesting research problems. I think Dario mentioned that funding or investment locally is a bit constrained. Again, speaks to government, but also industry getting involved in not only just providing bursaries, but funding some of the research work and the innovation ecosystem, so that we can have globally competitive remunerations to retain the talent, but also attract global talent, because you also need mentorships. I think we have some really great talent locally, but I think the younger generation sort of outweighs, those more established researchers. So you don't have a lot of mentorship locally. So when you travel to this, like universities and other research labs and other universities and organizations, there's a massive amount of established researchers that are just there and available to mentor the young generation. So I think we need more of that locally.
Okay, my next question is again for Dario. Openness to global AI innovation can accelerate progress, but it also risks creating dependence and limiting local control. How can African countries balance global collaboration with autonomy, control over data, and alignment to local values?
Yeah, so I think there's, in one sense, whenever you use one of these, ChatGPT or Meta Llama on your WhatsApp, you're giving data to a foreign company who can also pull the service at any time, and that does create a dependency. And I think governments should worry about this, because AI is going to be like electricity. And if you don't control the source, someone can cut you off. On the bright side, there's been massive innovations in open source models as well. So companies and countries that don't want to have a high dependence on a foreign entity for their API can install models like the DeepSeek, the Quen models, which are some of the best coding models, on local hardware and run it. They'd probably have to buy that hardware from NVIDIA for now, and that's another dependency. But once you've got hardware, you've got hardware. So I think that there should definitely be more interest in running models. And what I would say to aspiring data scientists and people who are wanting to work in the space, you should have downloaded a model. Download a model and run it. Run it on something. Run it on the GPU we just gave out, or run it on a Mac Mini or something. You'd be surprised how far you can get with zero internet. And then it clicks and there's this aha moment. I just downloaded something with all of the world knowledge of the internet onto a Mac Mini, and I'm running it, and it can answer any question. And if the internet stops working, I can still have this knowledge. And that's kind of the opposite of a risk. That is immense power to nations, to people. So I think open source is the way. We must embrace it. We must contribute to it.
Great. So my next question is for Babacar. So AI's potential impact will differ by readiness, data availability, and business needs. Which African industries do you believe are best positioned to benefit from AI today, and what factors give them that advantage?
It's very hard to answer this question, because on the one hand, the sectors that possibly need AI the most are the ones that are the least structured from a data perspective. So that's where the impact is going to be the biggest. Thinking about healthcare, thinking about insurance, thinking about even commerce and logistics that are all very low digitization. So that's where the impact is the biggest. On the other hand, the sectors where digitization has been strongest is financial sector, especially the payment space. So I think that very likely, that's my opinion, we will have more opportunities that are ready to implement in the financial sector. Why? Because with payments having become widespread, both for consumers and for merchants, there's now widely available, reliable data on the economic activity of individuals and businesses, which we did not have before. We had only for formal businesses. And informal economy is the vast majority on the continent. So this is a huge opportunity to start lending to these businesses and reduce the perceived and the real risk of lending in the economy. And Africa today has a credit to GDP ratio, which I think is around 30%. The US is above 200%. And the availability of credit is a huge factor in the growth of an economy. So I think we have huge potential for innovation in that space.
Great. Okay, my next question is for Ndivur. Industry and academia often work in silos, limiting their collective impact. How can we foster stronger collaboration and knowledge sharing so both can benefit directly from each other's innovation?
Yeah, I think a forum like this is a good start, and we need more of that, where you have academia and industry engaging beyond networks. Beyond networking. Industry has a lot of use cases, whereas research is working on mostly blue sky research. And they're different, they're coming from different school of thoughts. So we need a lot of engagement. And I think we also need industry to moving towards experimentation a little bit, so that they commit more resources, expertise, data, and collaborate with researchers. So I think that will create that a space in which you can engage more. I see this at IBM, because it's a technology vendor where you've got researchers, you've got product teams, you've got client engineering that builds prototypes. Our research has to be targeting specific use cases and addressing specific product requirements. Because it's a business, there is such a platform, an ecosystem. So I think adopting that more broadly at a community level would help. It's all you're always trying to find the best way to get both researchers and industry collaborating together, but we need that dialogue to start.
Okay. Just that I think there's a bit of a responsibility on both sides to reach out. So like industry to state their problems, and potentially challenge academics to solve this. Sponsor maybe your master's and PhD students to work on important things that matter. And academia also to reach out to industry, because there's two types of research. There's methods research, which, okay, you're improving a method, and that's not necessarily going to have a direct industrial application. But then there's applied research. And if this is as tightly coupled as possible with industry, I think you'll get amazing results.
Great, thank you. So my next question is again for Dario. So Africa has a vast untapped talent pool, but limited access to quality education holds many back. How can industry better equip the next generation to become AI-driven business leaders and entrepreneurs?
I actually think that, I think we underestimate how intelligent humans are sometimes. We think we have to set up things, we have to set up programs for people to learn. What's nice to me about AI is you can basically give it to a kid and they'll figure out how to use it. And they'll figure out how to be productive with it. I mean, I've seen my nephew, he's not even 16, sit with like ChatGPT, the free version, and make a game in like a day, and then start distributing it and playing it. And I think we need to give people access and get out of their way. Make sure there's connectivity, make sure that they have access to these tools. And I think you'll be surprised what the youth comes up with when they become AI native. They're just so used to using these technologies, using AI for everything, that they think differently and they can create differently. And I almost think us dinosaurs who were around from before mustn't poison their minds with our slow way of thinking. We're like, oh, it's quick time to market is 6 months. But kids these days could probably do it in 2 days. And, I think we should just encourage that kind of out-of-the-box thinking and give them access and get out of their way.
Thank you. Just a quick follow-up. One thing that I've heard mentioned is that relating to the earlier point of global models and us using global models, many cultures inherently don't trust these models, and I think that might prevent, even if they're available, maybe they're more difficult to get a culture as a whole to adopt them. I know this is maybe a hard question to answer, but are there any thoughts on that?
Well, it might be making the model more culturally aligned, which starts with language. There's a company, Lelapa AI. I don't know if they're represented here at the Indaba, but they're a very interesting company trying to make language models work on all the African languages and work really well. And not just big language models, small ones that will fit on phones. And I think that kind of initiative helps to bring these tools closer to people who would otherwise feel foreign. ChatGPT sounds like a foreign professor sometimes. It speaks in a very hoity-toity English way. And, making something that's character is closer, more culturally aligned, that's language understanding is more culturally aligned, that's topic knowledge is better, might reduce that sort of sense of initial apprehension. So maybe that's one way, but I mean, it is a challenge. Getting people to engage is the biggest thing. Get them excited about the tech, get them access, and make it something that they want to work with. And maybe that's some of the ways we can do that.
Yeah, I think also just to maybe a comment, I think there are also techniques for aligning, these large language models to, different norms or cultural contexts. And I think, we do see a lot of work in the poster presentations where they're sort of adopting existing models and trying to align them in their own context. There's also work at CMU Africa here in a robotics context where they're trying to get these robots to sort of behave in a way that's acceptable within a Rwandan culture. For example, like if you navigating a room and you see a group of people you don't go through, right? So that's not culturally acceptable locally. So I think there's pocket of work that's trying to address this, in addition to Lelapa. And maybe that needs to be showcased a bit more, right?
Thank you. Okay, my next question is for Babacar again. So what are the most common challenges African AI startups face in scaling from early traction to sustained growth? And where do you see the biggest gaps between capital, talent, and market demand?
I'm not sure the gap is in capital, talent, or market. I'd say the gap is data. The single hardest thing they face is whether they can access the sources of local data. And that's the part that takes really a lot of time. And given how they're usually function, right? Now I'm speaking about vertical AI, right? Sector specific. The challenge is, data protection laws are not fully established. So when you will go to the companies or public entities that have the data, they don't even know if they can provide it to you. So that starts a very long process. And as we know, startups can die any day. So this is a very big challenge. Now, then after that, of course, I'd say that talent is the second challenge. Not that there's no talent, but you're competing with all these global tech players that are paying huge amounts in dollars and offering maybe more flexibility than what you can allow. What I've heard here and there is that a lot of the top AI talent wants to keep time for teaching, for research on the side. Well, when you're a small startup and you can only afford maybe 1 or 2 AI experts in the beginning, that is a very high bar to meet. So in terms of capital, investors are excited about AI. I don't think AI is less well served than other spaces, unless maybe some investors who don't believe Africa can build AI, there are quite a few, but I think that will change.
Thank you. My next question is for Ndivor. So as AI moves from research labs to industry, ensuring systems are robust and trustworthy is critical. How can academic research better inform tools that industry can confidently adopt?
Yeah, so I think it has to start with science communication. I think there's a lot of hype, right? I think getting academics and researchers talking publicly about state of the art, good performances, but also limitations would help to have industry be more comfortable and trust the outputs or even new systems that are coming out. I think the other thing is maybe also targeting use cases that have higher chances of success, right? So that when you build POCs and MVPs, then there's a higher chance of scaling that out. Typically, these use cases are boring for researchers, but are very important, for industry. And then also, while doing that, prioritizing integrating AI features into existing tools in industry, typically as optional features, and also while keeping the human in the loop, right? And the other thing, I think one good thing that came out of this generative AI is that it's much easier to use, so people are playing around with them, and that sort of led to a lot of benchmarking. But that's usually happening in the academic space, right? So if we can have benchmarks that are more realistic. I've given an example with what we do at IBM Research. We work with academic benchmarks, but also work with other business units as clients, and we can see that when we evaluate state of the art from academia on these business use cases, they fall short. So there's more innovation that we need to do there.
Thank you. One quick follow-up I have. So you mentioned researchers should report the limitations of state-of-the-art approaches. One thing I've observed is that, at least by the frontier labs, I think there's a tendency to try and sell things, and so they're trying to report all the best things about an approach. So is there anything we can do to encourage research that reports limitations and not punish it so that it doesn't get accepted?
Yeah, maybe that academia industry collaboration, right? So maybe these benchmarks should reflect the real world, because then you start seeing that these performances doesn't translate. Yeah, because all these benchmarks are basically created by grad students, right? And not necessarily in collaboration with the industry.
Thank you. Okay, Daria. Some AI strategies fail because they aren't resilient to local constraints, like unreliable infrastructure or fragmented data sets. What principles should guide the design of AI systems to ensure they remain effective and robust in African contexts?
I think in general, the principles that should work in Africa are the same as the principles that should work anywhere. You have to have high quality data, and you mustn't waste, don't forget that data is the foundation of everything. So you have to spend time collecting, cleaning, curating, and getting the data to the point where it can be worked. You have to have good measurement of the output so that you can understand if you succeeded or not. And then you have to build, then you get to build in between. One thing we do have in Africa is sometimes we have unique data. I worked with a company a couple of years back called Mhlanga Labs. They were collecting African DNA from people, and they were using it to study the effectiveness of cancer drugs. Because it turns out that Africa, and in this case it was in South Africa, is the most diverse country genetically in the world. And so that genetic diversity is an asset, it's a strength. You've got data no one else has, which means that to a pharma company who wants to build a new drug, maybe using AI in the process, this data has more value than data from Europe. And I think we should also look for those things, look for the places where Africa is actually stronger. So yeah, and I also just want to speak to Ndivu's point on benchmarks. I think that's an excellent idea. I think we should be thinking about what are the new benchmarks, what are the business-centric benchmarks that are going to really drive things forward. Just like super, really good idea. Really support that.
Great, thank you. Okay, my next question is for Babacar again. So drawing on your experience in venture and capital allocation, what do you look for when assessing AI-related investment opportunities in Africa? Which traits, sectors, or capabilities signal the most promise?
I think two things. First, as in any startup, you want the source of value creation to be inside the company. So if the edge of the company is actually having AI models that work well, we want to see that they have been built internally and that the team masters them and that we have a team that is, I don't know what's the word, but state-of-the-art, world-class. And that's the single most important part. Apart from all the other items I mentioned, this morning during the startup session. The second thing is data. Because a model is great, but if you don't have access to data, then there's no AI business. Then it's a normal business. So we try to understand: have they acquired data? Do they generate data? If they're acquiring the data, what are their capabilities in that space? Because very often, if you're not generating the data yourself, you need extremely strong partnership mindset. That allows you to work with government, with companies, build trust. It's very painful and long processes, but if you're not willing to do it, you will not be successful. So those are the two things we look for the most.
Thank you. The data seems to be a recurring theme. One thing I'd like to follow up on with that, when we're talking about startups and small companies that are trying to grow, you're saying that they require data to be sustainable. If you have limited resources, how do you still collect enough data or diverse enough data to stay relevant?
I mean, we're speaking about AI startups only, right?
Yes.
Any startup will have a phase in its life where it's doing something that maybe is not scalable. But as a startup, your job is first to stay alive and then to serve your customer. So I think the solution there is to maybe provide a service that is not fully the final service while you're still acquiring the data. And we see companies, whether it's AI startups or non-AI, they have a clear business model, but sometimes you cannot build a full product. So what do? You build the distribution. So you already acquire the customers, you give them a product that is better than what they have, but it's maybe not yet your full product. But if they're happy with it and it's solving maybe 50% of their problem, you have a business until you manage to unlock what you require for the next stage to deliver the full product that you want. It is known that some of the big e-commerce startups in Africa, they started with Excel sheets and a phone. There was no data, there was no automated system to acquire the customers.
Thank you. Okay, my next question is for Ndivor. So much of Africa's AI research is published internationally, but translation into local products and services is often slow. From your perspective, what mechanisms, whether funding, policy, or industry partnerships, are most needed to accelerate the path from African AI research to African AI products?
Yeah, well, I think the best way is to establish our own startups, institutions, where possible. But we know that that's challenging. But in the meantime, there are various ways, whether it's through government policies, having grants that enable the application of research outputs in local problems. There are multiple such grants. And then the other way would be academia engaging with innovation agencies, in their ecosystems. There are startups that maybe are not AI focused, but could leverage AI capabilities, but do not understand this research that's being published globally. But through engaging with those startups, we can have a higher chance of getting African-based research outputs being integrated and applied locally. Again, at IBM, we do have a program for supporting startups where they do engage with our research lab. So we do some matchmaking, between a startup and some AI capabilities that's being developed by IBM Research, whether locally or globally, and we look to transfer that IP for free, to the beneficiary, under obviously certain, agreements. But again, it speaks to having academia engaging with industry. But there are also innovation agencies that host a number of startups that could have capacity to adopt IP that's been generated locally.
Thank you. Okay, my final targeted question is for Dario. So Dario, with governments having their hands full with urgent priorities like healthcare, education, and infrastructure, what role can or should they realistically play in supporting and regulating AI to ensure responsible private sector growth?
Firstly, I think education, healthcare, and infrastructure are all spaces where AI can make a big difference. So I think by focusing on AI, governments will be able to unlock more in their core priorities. That being said, responsible use of AI it's difficult to regulate. There's this fine line between under-regulating, where you basically let people build AIs that can do anything, and imitate someone in any context, or build weaponry and all these things. And then there's over-regulating, where you lock AI down so tightly that it's impossible to regulate. I'm Italian, and all I know about Italy with respect to AI is that they're always the first one to ban any new model. And I don't want Africa to be like that, because then you can't leapfrog the world when you're continuously regulating against it. But at the same time, you have to be careful and you have to find out where to draw that line. It's a hard question, and it should absolutely be on the agenda of every government.
Thank you. Do any of our other panelists have anything to add to that?
No, but I have a question. Can I ask it?
Yeah, of course.
Okay, so I want to ask the question to the three of you. One thing we're thinking about at Askia is how do we, scale the African AI ecosystem to position Africa not just as a participant, but as a leader in the space? And we have some advantages that have been mentioned here. Now, I want to ask you each if we could do one thing to get there, regardless of how big this thing is, to get African AI grow 100x in the next 10 years, what would it be?
I mean, I really like that you guys are investing in African AI. And there was a question much earlier in one of the sessions, in Africa, you'll only raise $300,000, and in the US, you'll raise $1 million. But in Africa, it will only cost you $300,000 to do the same thing, because in the US, it costs $60 for a bagel. So I think also, we can play to our strengths. And I think we should identify talent, invest in it, and find the problems where it's unique. We have unique data, we have unique skills, we have unique problems, and focus our investment, our time, and our energy on those things. And we can be ahead of the world in no time. And again, I would just look at Zipline as an example company in robotics.
Yeah, I think for me, it's about strengthening smaller communities that are more focusing on sub-disciplines of AI. And I think, following on the footsteps of the deep learning endeavor. And I think this type of workshops are trying to do. So we look at the deep learning endeavor has contributed to having smaller communities like Masakane, NLP. Now we've got others that are focusing more on climate and sustainability, that are focusing on African-centric challenges. We're also seeing other smaller communities. And we have to showcase what we can do with the limited resources that we have, so that others, whether it's government or international collaborators, will be able to trust that given more resources, we can even achieve more. So if you just focus on saying we have limited resources, have we maximized what we can do, with those limited resources, rather than just complaining about that. So I think investment in showcasing the different pockets of work that's been done, because there is some really good work that's being done in smaller communities.
Thank you. Okay, maybe one more question before we open up to the audience, and this is to all our panelists. So amid the global AI wave, uniquely African innovations often go unnoticed. Are there any homegrown AI applications, research, or business models that you think deserve more recognition on the global stage?
Well, I think we've already started witnessing some of them. I think there was this big NLP conference called ACL, so the Association of Computational Linguistics, where we had one of the papers from Masakane received best paper prize. So I think we already starting to see that happening. And I think the same over time will start happening in other domains. Also, there are startups also that are starting to make some waves that I think do deserve some recognition. You mentioned Zipline. There's also Lilapa AI. Yeah, I think on my side, that's what I would say.
Yeah, I think for me, it's people just need to speak louder about the problems they're solving. I know we at Isazi have solved forecasting in an African context for supply chains, and it's about taking that to multiple African countries with different dynamics. The borders can be closed, you can have different logistics problems, and optimize that. And if you solve things, we should speak about it, because I think that there are already a number of things, and I mean, we've mentioned some companies already, but I think even today there've been talks, there've been discussions of methods, of results, of problems that have been solved that have been world-class, and we just need to celebrate it more.
I agree with everything that's been said.
Awesome, thank you. Okay, thank you to our panelists. Before we, okay. So before we close, maybe we can just I think we have time for a couple questions from our audience. So does anybody have any questions or remarks? Please also state who it is addressed to, or if it's addressed to all the panelists.
All right, thank you very much, our panelists, for a very intriguing discussion. So I will be addressing my question to, I'm not sure what his name is, but the first panelist, yes, please.
Babacar.
Anybody on the panel could answer as well, please, thank you. So is there any AI business-oriented apps or AI tools that you could recommend for SMEs, specifically in the African continent? Thank you.
That's a hard one. I'd have to think about it. Yeah, I have not. There are several tools that have been developed, but I have not found one specifically, and you're talking about business management, right? One business management tool that...
Any AI tool that could be used by these entrepreneurs or SMEs to leverage upon to maybe skyrocket their business or grow their businesses? Then just to add context to the question.
Yeah.
Thank you.
I don't have an example that comes to mind specifically for this. The tools that we have seen that have really scaled today or starting to scale are not in that space. They're in healthcare, they're in the financial sector, they're in customer service. Those are the three areas where we've seen things that really have started to, find their market. So I would not recommend you something that is not yet at that level.
I can jump in. If you are building software, I would strongly recommend looking at Lovable and Replit, because you can build a prototype app in just by describing what you want. So even if you're not a software engineer, in minutes, and you can start asking customers if they would use it. So if it's software focused, I think Lovable and Replit are two really good apps to have in the back of your mind. If you're trying to solve a business problem, another really useful tool is deep research. Both Gemini and OpenAI have a deep research mode, and they're really amazing. You just ask it to go and do some research, and you get the quality of like a specialist consultant, like a Bain or an Accenture, definitely wouldn't have produced a report of that quality in such a short time. So deep research is really useful when you're trying to understand a market or a problem. And Lovable and Replit are great for prototyping. And my final tool I would recommend would be Notebook LM. It's free, it's by Google, and it can turn anything into a podcast. So if you're trying to learn something, or if you're trying to engage with some material, it's the most, it's a really rewarding experience. You can pop in some boring manual that you need to understand, and it comes back to you as a discussion with two hosts. So those are some tools that I like.
So thank you very much for the discussions. It was really insightful. So my name is Mwege Yashuza, and I have two questions. The first one, I heard as the hoster was saying all the time, the word what that was pointing at was data. So I'd like to know, how about the infrastructure? Is the current AI infrastructure in Africa truly African-owned? The second question is, what steps are being taken to ensure that the data centers, cloud platforms, and computer resources powering African AI are locally controlled? Thank you very much.
I'll try. Generally, if you build it, you own it. So long as you're a consumer, you don't own anything. So we have to build.
There is a company here at the Indaba called Cassava AI. I think they own a whole lot of data centers, and they are African, fully African company. When I went to San Francisco in March to the NVIDIA conference, the CEO of Cassava was there too. It's just I was sitting inside the talks where you are, and he was sitting with Jensen Huang buying hardware. And they bought a whole lot of these GPUs, so I would reach out to them.
So just to add to that, I was also heard about that, and there were some discussions here at the Indaba that them building these data centers locally also comes with a challenge of is Africa skilled enough in actually using this compute for training models? Because it's one thing to deploy an already trained model to develop applications. It's another to fine-tune it for a specific use case. And it's even more complex to pre-train a large model from your own data set. I think it also speaks to my earlier point that we need to be developing our skills and showcasing what we can do with what we have, so that when the time is right that we do find ourselves having access to more resources, we can immediately start leveraging them.
Thank you for a very wonderful talk. I have one small question. My question is around the risk of using AI in the future, right? So I like when you made the example of your nephew, 6 years old, making use of the AI, right? But then what is that doing in our thinking capacity, right? If I think about when was the last time I sat down with the problem and tried to solve it without being tempted to use AI or something like this? We also see this in the companies hiring people. They during the interviews or maybe pre-assessment interviews, they do wonderful stuff, but when they get inside the company, they barely can do anything, right? My question is then around in the future, is AI working for us or it destroying us in the long run? Thank you.
Well, I think there's a fine line. I think on one hand, if you think of before we had calculators, everyone had to do all these calculations by hand, but that is very laborious, right? So now with a calculator, you can actually do calculations much quicker, but you still need to go through the process of thinking through the steps. So I think the same thing with AI, right? If you want to apply it to something business critical or something that requires a lot of thinking, you still need to do the thinking yourself. If you wanted to summarize your document, you've already started doing the writing of the document yourself. Should you spend a lot of time thinking about how to make it succinct? Maybe just use a tool that exists. And I've used it when I'm organizing a conference, I'm thinking about writing invitation letters for speakers, I just ask ChatGPT and it gives me something and I refine it. I understand the process of actually writing an invitation letter. It just takes a lot of time. But with these tools, we can use it more efficiently. But I think in the education system, maybe we need to emphasize more that you still need to understand the problem itself and just use these tools to be more efficient. Yeah, but the jury is still out, right? You can actually enforce that practically going forward.
One interesting thing I've seen done in education is Khan Academy has a chatbot called Khanmigo. And what they're trying to do is, because they know the students are going to use AI to cheat anyway, instead of saying, okay, go and do this homework and give me your homework, they say, go work on this with the robot. So then the student has to talk to the chatbot, talk about how they're thinking, talk about their reasoning process. And at the end, the chatbot goes to the teacher and says, I was doing this exercise with your student, and they just pasted something in, and I don't think they thought it through. Or it will say, okay, we discussed this, they didn't quite understand this topic, but then we went through it a little more. And the teacher gets some understanding that the student is actually thinking. And you're using the AI to help it happen rather than trying to avoid the fact that the AI is there. So I think there will always be, humans are intelligent, and because we're intelligent, we'll find a way to solve the problem with the least effort, which means that students will find a way not to learn if they don't have to. But if you think about it, doesn't that just mean they didn't have to? So we need to create the environment where problems that we give our students are real hard problems, even in a world that has AI, and then they'll have to learn. So maybe I don't know, I went around and around on that one, but it's a hard question.
Okay, I think we have time for one last question.
Yes, hello. This is a target for Babacar, but I think if any of the panelists want to answer it, I'd appreciate it. So you mentioned the best way for us to keep the models and the infrastructure in Africa is we've got to build it ourselves. And what we've seen from America and China is that when we start building these huge data centers and computational buildings, we need more electricity, right, and more power. And we've seen that they've gone and started building nuclear power stations and huge development there. Now, my question is, if we start building in Africa, that would lead to the government needing to spend more money building some type of energy producers, where that money could be spent better, providing public education or informal settlements. Like, where do you think we should kind of lead everyone to say, let's rather build it? Or do you think that, it's not the best decision because you will be taking that money away from arguably more immediate returns? So yeah, I hope that makes sense.
No, that's a great question. I think to think about this, we have to think about the pie, the pie being the economy. If you're thinking about the economy as a pie with a fixed size, even a pie has a fixed size actually, as a pie and not a tree, well, effectively you'll be thinking, oh, I have this 1 billion, I put it here, I put it there, it's kind of a closed game. But that's not how it works. What makes all these energy investments and data center investments bankable elsewhere is because people believe that there will be revenue generated from it that will outpass the capital investment that they make, which is why we see all these big costs spending tens of billions of dollars into data centers. And they are backed by the banks, they are backed by funds, because they see where the return is going to be. So it's all about what are we going to do with that computational capacity, which can fix issues in healthcare, education, and all the areas that you mentioned. And that being said, you know, I would not build, I would think at the continental or at least at a regional level, not every country needs to build the full AI stack. We are lucky enough that we have regional economic zone in East Africa, Southern Africa, Western Africa, Central Africa. We can have hubs depending on which country has an advantage. For instance, South Africa has nuclear energy, right? Ethiopia has one of the cheapest energy in the world, thanks to the dam. So we have some advantages, but we need to stop thinking country by country. We need to act regionally. And then we can build, you know, a data center, I don't know, 1 gigawatt in Addis that makes sense for all of East Africa, so that you make sure you use that capacity so it's profitable. And then it enables the full AI ecosystem in that region.
Maybe just to add, I think we also need to invest in working on even more efficient AI paradigms, so that we don't have to rely on building very large models. I think if you look beyond the hype of generative AI, there is other interesting AI research happening. For example, there's work that I worked on previously on neurosymbolic AI that's looking to integrate symbolic reasoning and knowledge, where you have vast amount of structured knowledge that an AI system can immediately start leveraging without having to rely on training from a massive amount of data set, of data. Of course, it has limitations, but you know, that's why it's still research. So I think it was also mentioned in the panel yesterday that we should also focus on other AI paradigms other than the prevailing dominant ones.
Okay, thank you. I think that will be it then for the questions. Thank you so much to our panelists. I think it was a great discussion. I certainly learned a lot. I hope our audience did as well. And yeah, I hope you all enjoyed the workshop. Thank you. Thank you very much.